Property investors are fleeing Victoria, leaving fewer rentals on the market. They blame land tax, but the government says that's not the case. And the new costs landlords have to bear isn't having an impact.
Land and property prices has shown to move in cycles, and with those cycles come external factors like recessions, bank failures, change of governments, rising interest rates, inflation, and much more. But what remains the same is the land cycle and its rhythm of booms and busts every 18 to 20 years. This land cycle is driven by a number of factors, but mostly by land values, people's behaviour, and the bank's ability to issue credit at certain times of the cycle. So I've been thinking a lot about whether now is a good time to buy a house, and came across some interesting insights that might help. The real estate market is influenced by many factors, and it's crucial to understand them before making such a significant financial decision. So let's break this down by looking at the 18.6 year land cycle and recent data and forecasts from CoreLogic to see where we stand and what the future might hold. The 18.6 year land cycle is a theory that suggests the real estate market follows a predictable pattern of growth, peak, decline and recovery over approximately 18.6 years. This cycle is divided into 4 phases. The first phase is the recovery phase, which occurs after a market crash or recession. During this phase, property prices are low, demand is minimal, and construction activity is also low. It's a good time to buy if you're looking for bargains, but the market can stay in this phase for up to 4 years as it stabilizes. Next is the expansion phase, where the market starts growing, property prices rise, vacancy rates start to decline, and construction activity picks up. Increased demand and more accessible lending contribute to this growth. Then comes the hypersupply phase, where the market becomes overheated, property prices peak, vacancy rates increase, and there's an oversupply of new constructions. This phase is marked by high speculation and loose lending standards, which can be risky for investors. Finally, the recession phase follows the peak. With the market entering a decline, property prices fall, foreclosure rates rise, and negative sentiment prevails. This phase often lasts around 4 years as the market corrects itself. Right now in 2024, it seems we are transitioning from the expansion phase to the peak of the cycle. Over the past few years, property prices have shot up, especially during the pandemic. For instance, house values in Australia surged nearly 40% since March 2020. This indicates we might soon see a slowdown or correction, as the market can't sustain such rapid growth indefinitely. The high prices and increased construction activity in major cities like Sydney and Melbourne are clear signs of this transition. CoreLogic, a leading provider of real estate data and analytics, offers valuable insights into the current state and future trends of Australian housing market. Nationally, CoreLogic expects home prices to grow about 2.6% from January 2024 to January 2025, which is a slowdown from 8.1% growth observed in 2023. This suggests the market is cooling down a bit as we move towards the peak phase. Looking at regional trends, Sydney's housing market has been recovering with dwellings value rising from 16 consecutive months, although at a slower pace. The median house value is currently around 1.44 million and the median unit is around 849k. This indicates that while growth continues, it's not as rapid as before, reflecting the broader national trend of slowing price increases. Melbourne, on the other hand, has been relatively flat and slight increases in dwelling values. The rolling quarterly trend has been negative, with values down 0.3% year to date, showing some stagnation in growth. Brisbane's housing market is strong with values at record highs. Brisbane's dwelling values increased by 1.4% in May 2024, with unit values showing a clear divergence from housing. This strong performance suggests robust demand and limited supply in the market. Adelaide has also regained momentum with 1.4% increase in May and a 4.3% increase over the rolling quarter. Adelaide's median dwelling value has increased by $95,000 over the past year, reflecting strong demand and low supply levels. Perth's market has experienced rapid growth with both house and unit values rising. The median value increased by $14,412 in May 2024, indicating strong demand and affordability compared to other capital cities. Darwin has seen some downward pressure due to higher stock levels, but home prices still increased by 3.5% over the past year. Listings remain low in Darwin, but home sale volume is above average, suggesting healthy market activity. Canberra's housing values have increased by 0.9% in the first 5 months of the year, with houses driving the growth. However, Canberra's median dwelling value has dropped to the third highest among the capitals, overtaken by Brisbane. Interest rates are a significant factor in the current market dynamics. Rising interest rates are expected to have a major impact on the housing market in 2024. Higher interest rates mean higher borrowing costs, making mortgages more expensive and impacting affordability. This could reduce demand as potential buyers may find it harder to afford homes. A majority of real estate professionals surveyed by CoreLogic believe that rising interest rates will be the primary driver of market dynamics this year. Despite these challenges, there is still a positive sentiment towards economic growth, with many expecting housing values to rise modestly. So should you buy a house now? There are pros and cons to consider. On the positive side, even though growth is slowing, property values are still forecasted to increase. Buying now could secure properties before prices rise further, especially in high demand areas like Brisbane and Perth. Some regions are showing robust growth, and low supply levels in these areas could drive future price increases, making them attractive for investments. Additionally, rental yields have risen, reaching 3.5% across the combined capitals. This is beneficial for investors seeking rental income, especially with high tenant demand in major cities. However, there are also challenges and risks. Rising interest rates increase borrowing costs, making mortgages more expensive and impacting affordability. If we are indeed entering the peak phase, there's a risk of a market correction or slowdown in the near future. Buying at the peak of the market cycle can be very risky if prices fall later. Significant rises in property values over the past few years have created affordability challenges, particularly in capital cities. Buyers may find it difficult to enter the market without sufficient financial resources. Given the mixed signals from the 18.6-year land cycle and CoreLogic's forecasts, potential buyers should consider a few strategies. First, assess your financial stability, including savings, income, and the ability to handle higher mortgage payments due to rising interest rates. Second, search regional markets and focus on areas with strong growth potential and lower risks of market correction, such as Brisbane, Adelaide, and Perth. Third, consider rental investments if you're looking for steady income, as rental yields are currently high. Fourth, stay informed about economic indicators, interest rate changes, and regional market trends to make informed decisions. Finally, think long-term. Real estate is typically a long-term investment, and even with short-term fluctuations, holding property for several years can yield significant returns. So deciding whether now is a good time to buy a house depends on various factors, including your financial situation, market conditions, and long-term investment goals. The 18.6-year land cycle suggests caution, as we might be nearing a market peak, potentially leading to a significant slowdown or correction. However, CoreLogic's data shows there are still opportunities for growth, particularly in certain regions with strong demand and limited supply. Thorough research, Careful financial planning and a long-term perspective are essential to making a wise investment in the current housing market. Whether you're a first-time buyer or an experienced investor, staying informed and strategic can help you navigate the complexities of the real estate market and make a sound investment. Thanks for watching, and I'll see you on the next one. Peace.